Hey guys, Mike here. So Jerome Powell spoke today, and guess what? Shockingly, he said, inflation not going the way they want it to go right now, making it stubborn, making it hard for them to talk about rate cuts, right? And so the market, you might think it didn't like it because it basically barcoded all day, but after he got done running his mouth, the market went green a little bit, right? So not bad. I mean, not small caps as I'm recording this, but the, QQQ, SPY, shocker there. It may have felt like everything was red, but it was not. I'm going to show you what I'm talking about there. But understand why all of a sudden you see these Fed presidents out there going, well, rate cuts, I don't know anything about that, because we had retail sales come out yesterday, and what did you see? They actually were higher than what the market expected, and you can see right here non-store miscellaneous, gasoline, general merch, basically the stuff I guess in a way you say we gotta have was up. What was funny, the things we don't need, like sporting goods, clothing, accessories, autos, furniture, were all down, right? And so that's a pretty interesting one to look at right there. But when you look also, check this one out, you can see things are slowing down, and when you look at like the food service, like restaurants, bars, things like that, just look at where we are in February. Like, that's where it's at. Look to the left. That was 2023. Look even farther to the left. That was 2022. Now, I don't have to be a genius to look at this and say, wow, from 2022 to now, things have definitely slowed down in that sector, even though where I was at this weekend with my family, it was packed out busy, but that was a touristy type place, right? And so let me know if you're in your area, are you seeing the same thing? Because around my area, I'm actually seeing this where it really is. It's a lot easier to get tables. Let me tell you right now, okay? Now, I always say I'll keep you updated on the housing market. Here's the update. Still a hot mess, right? I mean, March housing starts down 14% month over month. The expectation was 2.2, and then the building permits, fell minus 4.3% month over month. The estimation was about down 1%. So the housing market, as you can see, still a mess. As long as these rates are high, it will continue to be a mess. I'm seeing more houses for sale in my area now, and it's selling pretty quickly because the inventory is low. Let me know again what's going on in your area on that one. Now, something we are seeing here, finally, we ain't seen it in a while. Let me look at this morning news brief here. You can see right here, I'm going to highlight this for you. This is your sentiment, breath, and all that good stuff. And I'm going to go ahead and magnify this real quick. And you can see for the first time in a long time, we're in fear on both greed indexes, I like to do. And so that's something. These still aren't quite synced up number-wise, but they're both in fear now. You can see the breadth as far as the percentage of stocks above 200 moving average. The S&P was up to 81 at its high, so that's a 14% drop. The Russell was around 58%. And so that's about a 14% drop. Now, it didn't stop Wall Street. One reason we actually did go green today was all these upgrades came out this morning, a boatload of them. You recognize the names? NVDA, right? AMD, Amazon, Google, Meta. And so it's no surprise that, as I'll show you, this is obviously these heavy weighted stocks in the market. And so, I mean, just look at some of these price upgrades. I mean, Google 154 to 174, Amazon 200 to 224, NVIDIA 1160, Meta from 530 to 610, another Google from 150 to 166, another AMD at 225. And look at this price upgrade. Hey guys, before we continue, please hit that thumbs up. Really appreciate it. It helps people find the video. And think about subscribing if you like this kind of content. And look at this one right here. Super Micro from 600 to 1500 at Loop Capital, whoever that is. So tons of price upgrades. And when you look over these stocks, I don't believe it. I think every one of these are actually green. You see SMCI was up 6% today. NVIDIA, 2% today. AMD also had an AI pump because they rolled out some kind of new chip or something. So that was a 2% day for them. But again, no surprise there. And of course, these are heavily weighted. So what does that do to the market? That's what was holding it up pretty much all day, because we would have been super red if it wasn't for these stocks. There's no doubt about that. And when you look at, the S&P here, I'm going to look at this a little more carefully. Wherever your target is or wherever you want to look at here, you can see we're holding this 2-hour demand area that I talked about. We held it today. We're holding right above it, right? But again, that gap is right below, and you can see the percentages here, okay? And we hadn't even sold off that much. That's what's crazy. People like we're down 10% or something. I'm like, nope, we are not even close to that. If that gap fills, that's only 5.33 on the S&P right here. So I mean, that's nothing. We talk about a sell down, right? I mean, if you look at like wherever you want to take your fibs from, right now we're at that golden pocket. If you take them where we started to move up last, right? If you want to come down and say, nah, let's go to this level, we're still at the 0.50. But if you take it from the bottom, right, from the beginning of the year when this thing really started to ramp right there, we're not even at the 0.5 fib retracement, right? That would actually be at the bottom of that gap. And that's still not even a major sell-off. And so it depends on what you look at. You got people out there doing Elliott wave theory and everything else. I look at all this stuff to try to figure that stuff out. But you can see, when we did these small sell downs, we at least hit the 0.50 fib, right? When you come down here, or 50% retracement, however you want to word that. And then if you look at the 10% sell-off we went through last year at the very end of the year, we came down right at around 50% retracement from where we bottomed in October of 2022 right there. And so again, it depends on where you want to draw your fibs from, and that was a 10% right there. 10% you normally get like 1 to 1.5 years in between those kind of pullbacks on average. You get anywhere from 2 to 3 times a year, right? I think I've showed you that chart before. So again, these pullbacks were nothing, but again, this run up has just been absolutely insane, right? And then if you come over here and we pull up our moving averages, normally on a run up, you're going to be hitting the 50 along the way. Unfortunately, we didn't do that for a long time. Even in 2020, when they put $7 trillion in the economy, we were hitting the 50 pretty regular on the way up, right? We were even hitting 100 a couple times. And so that's absolutely normal. And again, here's these 3 to 5% pullbacks multiple times along the way. But unfortunately, this market went absolutely insane and decided not to do that. And so we couldn't pull back 10% just because of that. But when you look, here's another one. I mean, one of the greatest bull runs ever from 2010 on up. Just look how many times we hit the 50 and the 100 on the way up, right? The 200 was sparingly. Normally, it's about every year and a half to 2 years maybe. But that 50 and 100... it's pretty regular, every 2 to 3 months it looks like, right? And then we do a nice pullback down, right? It's almost a 20% pullback, and then you're just bouncing off the 50 and the 100 on the way up, right? And then nice big pullback, and then you bounce off the 50 and the 100 on the way up, right? But you look at this mess we're in, look at that. To the right, just straight up. We just touched the 50 for the first time this year, I believe. Yeah, the first time this year is the first time we touched the 50. Hadn't touched the 100 at all, right? When the first quarter is gone already. We're in April. And so that's just crazy, right? That's what we kept talking about, how this market, when we kept talking about when we pulled up the RSI, was even nuttier. You may think, looking at this right here, oh man, I bet you we are so oversold at this point in time, right? Oh, and absolutely not. I'm going to pull that up in just a second. But you can see right here, even when you pull down, it ain't straight down unless it's some kind of catastrophic event. This right here came almost all the way back up multiple times on that 10% pullback, right? And so that's what we get to see. Are we going to end up pulling up right here and then starting to pull down or not? That's what we got to see. And again, a lot of this is going to depend on what? We're in earnings season, right? We're in earnings season. So if these earnings come out good, what do you think is going to happen? That's what you got to try to figure out here, right? Some people are drawing. I've seen this drawn many times, right? Where they're thinking it's going to move up, then we're going to get a big pullback down, and then we're going to take off, right? Because remember, selling ain't going away. That's at best a 50-50 shot. I showed you the last 10 years. It is a 50-50 shot if that is the case. Please put in the comments what you think is going to happen. But I've showed you guys, I've showed the members multiple times. In the last 10 years, 6 out of 10, I believe, were positive. And some of them were huge years, by the way, through those months. It was volatile, but it was big. Here's the RSI. Like, a lot of people think we're oversold right now. It's like, no, we're not even close to being oversold. That's what I'm saying. I'll say this ain't even a major pullback or anything. I mean, give me a break. Look at the last real big pullback, right? We got oversold twice. Here, we're not even touching it yet to be oversold, right? But you saw that, we pointed out many times, that RSI divergence, right? That bearish RSI divergence that went on for weeks upon weeks and finally playing out now. So, and then the other level to watch is going to be the old all-time high, right? I mean, that's going to be another level to be watching as well below there. But again, we talked about NASDAQ 100 doing what? On the weekly, having a bearish MACD cross. And when this happens, right, that's the last time it happened, we sold off quite nicely because it's a higher time frame where this is happening on, right? And so again, if this right here comes down to that demand area, because it's been holding up obviously better because it's obviously made up of heavily weighted stocks that have been holding up, then, that supply area, you see shaded right there, demand area, excuse me, might hold up very well. But you can see anytime you get a bearish MACD cross in the weekly, you usually have a decent sell-off. Now, IWM is a whole different story because this one is super rate sensitive, right? This was really dependent on the cuts. They're going to cut and all this good stuff. So it's been roaring. And again, here you are, hit that level right there. That level has been a brick wall, right? Been an absolute brick wall. And again, here's the rejection. And this one is down about 10% now. Okay, so this one is down 10%, but you expect that with small caps. Okay, again, with earnings season, they better freaking do really well. That's better be what happens. But where you got your bounce today was that 2023 November low where we took off right there from that sell off. That's where we got the bounce today. It hit the weekly expected move, coincided with that anchored VWAP. That's where it held up today. So we're going to see if that holds or not. You can see, obviously, this is a daily, so that is 3 extremely bearish candles right there coming down. And usually, sometimes you get below or right at that expected move. That's when you'll get a bounce back up. Okay, and so that's what we're going to watch for and see if that actually holds. And you can see why it's a danger zone, because that needs to hold. If it doesn't, you got this volume gap right here, right? So it can come down to around 189.50 right there before it starts to hit some more tree branches for support. And so again, keep an eye on this level for maybe it's a temporary bounce, permanent bounce. That's what we got to find out. But again, now that Powell is telling everybody, and every Fed president who you can hear saying, yeah, ain't gonna be cutting rates for a long time, the market and the more importantly, the bond market they're adjusting, right? And telling us this. So now you see, I would say watch stocks that are doing at least decent or holding up during the sell-off. And this is what we talked about Sunday. You got Boeing right there, right? You got stuff breaking out in the Middle East. It's holding that trend line. You got United Healthcare up big off earnings, which is done before. It came into that support area, right? It's been holding on for almost 2 years. Got a really nice bounce. And then, of course, shockingly, Lululemon, as I just showed you, sells not really good in apparel right now. But trend lines tend to trump a lot of stuff in support areas. So you can see this one right here. It's holding up, right? Holding up and getting a small bounce right there. And even if you pull up the volume profile, even though there's a gap right there that it's kind of partially started to fill and stuff. And I was like, well, maybe it fills the whole thing. But when we pull up the volume profile, you'll see where, man, yeah, this thing definitely needs a bounce for sure. And so it is coming into a high volume area, right? And so we'll see if that's going to hold for Lululemon, because it's been crushed, right? It's been crushed. Now, the stock, of course, is going to make the market go tomorrow. It's going to be ASML, okay? Because this one right here is a semiconductor, okay? If they have bad forecasts, if things look like crap, then you bring the semis down, you're going to bring the market down, right? Again, you'll have more banks reporting, Alcoa, Sands right there, Discover, CSX. So, the big one's over that one. And then the next morning is going to be Taiwan Semiconductor. So that's the really big one this week. Now, as far as economic news, nothing going on in the morning. You will have a 20-year bond auction at 1 o'clock. If it goes wrong or bad, it's going to spike yields. If it goes good, yields will drop and we'll get a bounce. And then you'll have more Fed speakers coming out and running their mouth. And I assume they're all going to say the same thing. And so I know a lot of people talk about rate hikes. I cannot imagine this Fed, even if they needed to do it, I just can't imagine this Fed all of a sudden starting rate hikes again. It would be stunning to me. Let me know if comments if you think they actually would have the spine to do it if it needed to be done, right? If inflation really started continue to get out of control, and I don't expect to go up to 9% again, but even if it starts treading up even more than where it's at now, that is not good. Not good at all. Again, I keep telling people, forget about the freaking inflation. Just look at the prices where they're at now, right? And that's what I was telling members of the video today. This is, if they keep rates high, right, this is where usually something breaks. This is where the bond market comes in at. Watch the bond market closely. Okay, these yields are going up for a reason, because the bond market's telling you, one, inflation is going back up. That affects it. And then two, they can't cut, right? And so that's why you're seeing the dollar and the yield continue to go up, which is putting pressure on stocks. But what have we seen in the past? Stocks can ignore anything. I showed you, and I know I've done videos in this, where when the stocks were roaring, the yields were going up too at one point in time, and the stock market didn't care. It's like, whatever, we're good. And then you had the sell-off happen from like end of July through beginning October, right? Because they ignored it for the longest period of time, right? And so, the market's a funny thing like that. But, we'll see. And we're in earnings season. So again, if these, Netflix reports this week, if these larger companies which hold all the weight, Microsoft, Apple, if they report good earnings, where's the market going to go? Right, that's what you got to look for. And so, and earnings guidance have been getting raised, which is kind of funny, but that's what's been happening, right? And so, anyway, let me know if that makes any sense. Please hit the like and subscribe button on the way out. Again, tomorrow, Wednesday now. So midweek, we'll see if we get some form of some kind of bounce or something to move back up a little bit or a lot, depending on what goes on with ASML. Let me know what your bet is on that one. I'm not playing it or anything, but let me know if you are. So anyway, I'll be here tomorrow to report it, see how it goes, and hopefully we get more volatility, because they was basically barcoded for the majority of the day, and it was really boring to watch. So have a good one, guys. I'll see you tomorrow.